All right, let's go to the next question. And I've seen a lot. I haven't dealt with this, but I had actually a seller bring this up to me. You want to know what's the deal with assumable loans? I have a 780 credit score. So what do I need to do to assume a homeowner's loan if they have a very low interest rate? And like I mentioned, I had a seller that had a 2.5% interest rate. He goes, can I offer that right away? Well, what does the buyer need to do in order to qualify for to assume that loan?
Good question. Assumable loans is a topic I have of conversation almost daily, right? Because it's very enticing. You got a FHA, VA. They're the most, it's rare that you see a conventional loan can be assumable. But these during COVID, people were locking these loans at 2.25 to 2.75. That rate looks a lot better than today's rate. So it's all the rate. It makes sense if you can get an assumption completed. On average, the banks, I'm going to back up into the process, but on average, it's taking the bank 60 to 90 days to approve them. The downside is you don't know if you're approved or not till the end of it. So now that's a detriment to the seller taking their house off the market. The buyer has to be patient, fingers crossed, toes crossed, hoping that the final word when they get it is positive. I was talking to a title company last week. They just closed on an assumption that was an open escrow for 1 year. The
Wow.
average seller is not going to wait a year to do that. Eventually, they're not going to care about you getting that lower rate. So now that I explain how that works, I'll explain the assumption process and what a buyer has to do coming into that. So you actually don't, if you're trying to buy, so you're a buyer, the seller has a VA loan at 2.75. They're saying, hey, come assume this loan. The start of the process is you do not work with me. Okay, you work with Nicole on the real estate side, you submit a standard contract, and then you work with the seller's lender. So whoever holds that mortgage, you work with them, you go through a pre-qualification process with that lender called the servicer. Whoever you make your mortgage payments to is called a servicer. So you work with that mortgage servicer to get approved. You fill out all their paperwork, they review it, they determine if they'll let you assume it. The biggest drawback, and there are assumptions happening right now because of the rate market, the reason why you don't hear them happening at high levels is because let's say that veteran that owns that house wants 400,000 for his house. And you're going to assume his 2.75% interest rate, but the balance on his mortgage is $200,000. You have to bridge that gap and come up with that $200,000 in cash. And how often does somebody have $200,000 in cash to spend, right? It does happen, but it's not every buyer. So that's why you don't hear of them being successful as often as you think it would be. Additionally, what most people in the industry, real estate agents, lenders, and definitely buyers and sellers don't understand, that lender has no motivation to approve that assumption. If they're holding that loan at 2.75%, they're making hardly any profit margin on that loan by servicing it, right? They now know the seller wants to sell. So there's rules they have to follow. I don't even know them all, but there are regulatory rules they have to follow and be prudent and not be discriminatory. But they have every reason to find something in the file not to approve that assumption, because they now know the seller wants to sell, so they can get that low interest rate mortgage off their books. So not making any accusations that any servicers are doing that, but that's why it's very hard. The first part is always the lack of cash to make up the difference between the two. I have recently heard of one lender that will do a home equity line for part of that, but you still have to come up with some money. There's some drawbacks if it's a VA loan and the person coming in is not a veteran. They tie up their entitlement until that new buyer pays that loan off. So it impacts their next VA purchase. So both on the buyer and seller side, there's a lot of moving pieces there that can make that tough. If you're patient, time is not of the essence, and you find one, I would argue it's worth going through the process. I just wouldn't get my hopes up.
Right. Yeah. I haven't heard of very many. Now, do you think that because, like you said, it's just a cheap loan, so they're not in a rush to try to get, somebody else to assume that? Do you think that's probably why it's taking so long, is because, hey, we're not making money off of this one anyways?
No, I think that's plausible to think that that might be the case, right? That they're slow playing it, hoping there's buyer fatigue and they just back out of the deal. I don't think that's the case. Have
Okay.
to remember the only time assumptions are really big is when rates go super low and then coming out of that rates go super high. And those big swings don't happen often, right? We're in a very weird situation, market situation that we haven't seen in a long time. So keep in mind all these servicers around the country, they might have had a one person department for assumptions because they might see an assumption once a year. They're probably dual
Okay.
position doing that and something else. And all of a sudden this happens, and all of a sudden one servicer gets 100 assumption applications in a week. So I think that probably plays bigger into it, is the labor force to handle those assumptions just isn't where it needs to be. And they know it's a short-term thing, right? As soon as the rates come down, assumptions will go away. So they don't want to do a ton of hiring either.
Yeah.
I would put more on that than anything.